Over IRS Form 8615, tax for certain children who have unearned income. So this would be a tax form that would be completed in the case of a child that meets the following criteria. First, they had to have more than $80 or $2,600 of unearned income for the tax year. So that would be income from anything other than salaries, wages, or other kinds of work. It would include taxable interest, dividends, capital gains, rents, royalties, pension and annuity income, taxable scholarship, fellowship grants, unemployment compensation, alimony, and Social Security, or income that was derived from a trust as a beneficiary. So the child also has to be required to file a tax return. The child met certain age criteria. So either they were under the age of 18 by the end of the tax year, they were at least 18, but they didn't have earned income that supported more than 50% of their living costs, or they were a full-time student under the age of 24, and they didn't have earned income that supported more than 50% of their costs. At least one of the child's parents was alive at the end of the tax year, and the child does not file a joint return. So there are three parts to this tax form. We're going to go through them step by step. Part one, we're going to calculate the child's net unearned income. Two, we're going to calculate a tentative tax based on the parent's tax rate. And then in part three, we're going to calculate the child's tax. So this entire tax form was created by the IRS because there were instances in which parents would hide parental income under a child's tax return so that they could maybe shelter part of this income from income tax. The IRS does allow a certain amount of a child's unearned income to be taxed at preferable rates, but this kind of forces the proper calculation of what should be calculated for tax purposes, and helps to prevent parents from taking advantage of a child's preferred tax brackets. So we're going to go step by step. We're going to start with the information at the top of the form. So let's just say that this is for Elizabeth Doe. And let's just put in John Doe's information. So this does, in the instructions there, it basically says if a child's parents are married to each other and they file a joint tax return, use the joint return to complete this form. If there are other situations in which the parents don't file a joint tax return, then the instructions have additional guidance. So for parents who are married but filing separate returns, this would go under the return of the parent with the greater taxable income. If the parents are not living together, then the parent, the custodial partner, the parent, if the custodial parent is considered to be unmarried, then you would use the custodial parent's return. If the custodial parent is married, then you would go back to using the greater taxable income. And if the parents are divorced, then the tax return would fall under the custodial parent. So basically, you're either using the custodial parent, which is the parent that the child spent most of the tax year with, the majority of the tax year, or it defaults to the one with the greater income. Let's just say for intents and purposes, we're using the John and Jane Doe. They're married and they're filing a joint return. And then let's just say that Elizabeth's unearned income is $5,000. So in part one, This would basically be the adjusted gross income from IRS Form 1040 or 1040 NR, line 11. So we're just going to put that in here. If the child had earned income, you would need to use the child's unearned income worksheet to calculate the amount that you put into line 1, or you can use the alternate worksheet for IRS Form 8615 if the child files IRS Form 2555, which relates to the foreign earned income exclusion. If they have a net loss from self-employment, or if they're claiming an NOL, a net operating loss. So most situations don't involve any of that. So you can probably just follow the line 11 guidance and do that. But we will put links in the show notes to certain resources we've created on forms and other worksheets that are mentioned here. So if you need more information about 2555, that's the foreign earned income exclusion form, we'll put a link to that in the show notes, as well as any other forms and schedules that are mentioned here. So as a reminder, earned income just relates to wages, tips, other compensation for work that was performed. So in line 2, if the child is not itemizing deductions on Schedule A, then you would enter $2,600. If they do itemize deductions on Schedule A, then you would enter the larger of either $1,300 plus the amount on Schedule A, line 17, that's directly connected with that unearned income, or $2,600. So you may need to do an additional calculation based on what's on the child's Schedule A. So we'll just say that for the sake of this, it's $2,600. So we're going to subtract line 2 from line 1, and the result is $2,400. Now, if this ends up being 0 or less, you can stop here. You would need to attach the form to the child's tax return, but you don't need to complete the rest of it. So in line 4, we're going to enter the child's taxable income from line 15. And if they file IRS Form 2555, you would enter the amount from the child's foreign earned income tax worksheet instead from line 3 instead of the child's taxable income. We'll just go ahead and assume that we're talking about the child's taxable income, and we'll just say that that's $10,000. We'll enter the smaller of either line 3 or line 4. In this case, it's $2,400. Again, if this was 0, you can stop, but since it's $2,400, we're going to have to keep going. So in line 6, we're going to enter the parent's taxable income from the parent's line 15. Let's just say that that is $50,000. Enter the total from other line 5 items for all other children in the house of the parent named above in this section right here. So we'll just say that Elizabeth is an only child, but if she did have brothers or sisters, you would need to include the amount from line 5 on all the other forms, but not this one, because you're going to add all of them together. So you don't want to add this one twice. So let's just say that that's 0. And now we're going to total the entire household's income. So Elizabeth, her parents, and then any siblings. Now we're going to enter the tax on the amount on line 8 based on their filing status. So you can use the capital gains, the qualified dividend and capital gain tax worksheet, the Schedule D tax worksheet, or Schedule J if that's appropriate. If you do use that, you're going to do the check mark. Generally speaking, you can use the tax tables if that income amount is up to $100,000. So I'm going to pull that information. Based on a married filing jointly tax return. and it's going to take me a second to look this up, so bear with me. So 52,400, that amount happens to be 7,027. So again, this is for 2024 tax year. Same principles generally will apply when the 2025 version of this form comes out. You'll just have different tax tables, different calculations. If you're using tax software, generally all of this is updated and calculated automatically. So in line 10, we're going to enter the actual parent's tax from the line 15 amount minus any alternative minimum income tax. Or alternative income tax. Sorry, alternative minimum tax. So you wouldn't include any tax from IRS form 4972 or IRS form 8814. So the IRS form 4972 is the tax on lump sum distributions. And IRS form 8814 is the parent's election to report their child's interest and dividends. So parents would use IRS form 8814 in the case that they want to report their child's income so that the child doesn't have to file a tax return. So you obviously wouldn't include that. And you wouldn't include any recapture of education credit. So for simplicity's sake, let's just say that the DOE's tax return reflects $8,000. Now, if you use the qualified dividends and capital gain tax worksheet, Schedule D or Schedule J, you're going to need to check this box. Actually, let's make this something that's a little bit more manageable. Let's say that this is a $6,000 tax bill. So parents' tax return should be lower than this because this was based on the 52,400. If we were to do it honestly, I would go back to the tax tables, redo the tax based on the $50,000 number. So let's go ahead and do that honestly. And we've got 6,059. So I actually wasn't that far off. So now we're going to subtract line 10 from line 9. And we're going to come up with, let's see, 9, I think that's right. Let me just double check. Yeah, $968. So line 7's blank, but if it weren't, we would not take this amount, add it to line 13. We would actually do this extra calculation. So we'll put 968 here, but let's revisit these other lines. So let's imagine that we had to do this line 12A and 12B calculation. You would take this line 7 amount, and let's just pretend it's $2,000 here. We would add these up, and that would be 4,400. We would divide line 9 by line 12, or line 5 by line 12A, and then we would put in whatever that prorated fraction is. I'm not going to use a calculator. Let's just say it's 45%. We would then take this, multiply that by 45%, and put that figure in here instead. But since this child's income represents 100% of the total child's unearned income, we're going to leave that here. So now in part 3, we're going to calculate the child's tax. So we subtract line 5 from line 4, and we get $7,600. So remember, the taxable income was the total taxable income. This is the total amount of unearned income that's above this threshold of $2,600. So now we've got $7,600 of quote taxable income. That's after that this amount right here. So now we're going to enter the tax on that amount based on the child's tax filing status. So the child's tax filing status would be as a single taxpayer, and $7,600 is going to be $763. And again, if you had to use any of the additional worksheets, you would check the box accordingly right here. We're going to add these two figures up and we get a total of, let's say, we'll call that $1,731. So now we're going to enter the tax on the line 4 amount based on the child's tax status. So that $10,000, that tax ends up being $1,003. And now we're going to enter the larger of either line 16 or line 17, both here and on line 16 of the child's Form 1040. And let's go ahead and pull up the Form 1040 just so that we can kind of point out exactly what we're talking about. So it's at line 16, so this is the taxable income line. This would be the tax line. So that's the amount that we put right here. The 1731 would go right here, and then go through the rest of the calculations to determine what the total tax ends up being. So that's all we have for IRS Form 8615. You can feel free to check out any of the details in our article, which we've updated to reflect the most current version of the tax form currently available. So you can check that out on teachmepersonalfinance.com. Type in IRS Form 8615, and that form will appear, or the article will appear. We'll also put the link to this article as well as other tax forms and schedules that we've mentioned here in the show notes. So if you have any questions or comments, please post them in the comment section. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.